I thought that this was a really fantastic quarter. You have the analysts who don't know what to do. They really don't, because they've been wrong. David, they've been so wrong that it's better just to say, you know what? I never really understood the valuation, but I do think the company's a pretty good company.
As far as the ZEV credits, the simple fact is this. Tesla is eating their competitors' lunch, and they're making them pay for it. That's a pretty cool trick.
Hey, I'm Steven, and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So here we are, once again discussing Tesla's record, blowout, amazing, incredible, mind-blowing Q3 results. Now, as many of you guys and girls will be aware, Jim Cramer has an enormous audience and a huge amount of influence, especially among mum and dad retail investors in the United States. So his opinion carries with it a huge amount of weight. Jim is over the moon with Tesla's Q3 results. So in this video, I'm going to share a few clips of his responses and some more of the mainstream finance media coverage around Tesla's Q3 results. I'll add a few thoughts and comments where I think it's relevant. So let's get into the video. But first, hey guys, if you live in the US and would like up to 2 free stocks valued up to $1,600 each, use the link in the description to WeBull and deposit $100 in your account. Each of these stocks will be a minimum of $8 in value. So if you suck at math, that is a 16% ROI on $100. Not bad. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also using the link in the description. Let's get back to it.
I thought that this was a really fantastic quarter. A couple reasons. One is that if you look at the financials of Tesla, they are as clean as can be. And I could argue that this company is doing incredibly well. The conference call was a conference call that reminds me of people who just want to tell the truth, straight as can be. Elon Musk, I'm not saying he's restrained or he's in a straitjacket, but what a terrific conference call. It's very hard to think negatively about this company. I know that there are people who talk, obviously, valuation, but there are a couple upgrades today, and I think they can't fight it. It's the reason why they can't fight it is because when everything works, it's very difficult to argue what the price should be, because right now, this company is doing incredibly well. And if they make as many cars as they say, what you're going to say is, you know what? I know that it sells at a gigantic price to earnings, price to multiple, whatever. But, David, when I read through the Tesla notes, what I read are analysts who are just saying, you know what? I can't fight it anymore. I have to like it.
Yeah, I did notice one of those fashionably late.
Yeah, it was a good title.
Yeah. Baird upgrading to outperform. I mean, fashionably, look at the move in that stock. At this point, I'm not sure you want to weigh in and say you're upgrading now. That's pretty embarrassing.
Is it just me, or has the tone really changed in the last 6-12 months on CNBC? I mean, David literally just said that it's embarrassing to be an analyst now who's finally coming to the party and going, oh, hey guys, I just upgraded Tesla stock. I finally get it. Oh, look at me. I finally get it. Yeah. Now, don't get me wrong here. It's definitely better late than never. Shout out Gordon Johnson. But it really does seem like the tone has changed in the mainstream finance media, at least on one of these networks. A couple of years ago, people were mocking Tesla left, right, and center. They had short shills, bears, clowns, dingbats, morons, and plenty of stuff in between. Very few people having a reasonable discussion about Tesla. They couldn't get past a quarterly loss or next quarter or next week. Now, suddenly, people are seeing the big picture and realizing the inevitability of what Tesla's going to do. Now, I don't want to labor the point, but it really does matter what's being said on the mainstream finance media networks regarding Tesla. This affects widespread sentiment, and that causes people to make decisions such as buying or selling securities. So this really does matter. The mainstream finance media narrative has done a 180 in the span of 12 months. From Tesla sucks, they're going bankrupt, stay away, to nobody's catching Tesla, rip legacy auto.
But Jim, when you get to the metrics that you're looking at to try to determine what a price should be, granted, if this company is operating extraordinarily well, I still wonder, what is an appropriate multiple? I mean, they still largely are. I mean, again, you argue they're a technology company.
Well, that's what I find. I'm going to talk about this. Argue? You have to. I mean, this morning there are two price target bumps for Ford. Now, I happen to think Ford's doing extremely well because they've decided to not lose as much money as they used to.
Ooh, Jim Cramer, what a savage. I mean, I like it, but wow.
We're talking about JP Morgan going from 7 to 9, Barclays 8 to 9. But you know what, David? These are companies that are bound by the conventional four walls of the spreadsheet. People are not going to give Ford any of the credit because they don't like this whole model. I had Mr. Fisker on last night, and basically what those guys do is make a car, okay? And it sells because it's great looking. And that's what I feel about Elon Musk. He makes cars, but he's fully integrated. The cars, he can do 510, whatever he sells, whatever he makes, he's going to sell. There's no dealer network. And now he's starting to say the same thing in China. So what you see is a frictionless model. So you have the analysts who don't know what to do. They really don't, because they've been wrong. David, they've been so wrong that it's better just to say, you know what? I never really understood the valuation, but I do think the company's a pretty good company.
This is a great point from Jim. As many of us know, so many analysts have been so wrong for so long. However, I beg to differ just marginally in terms of Jim's suggestion to these analysts of just going, well, I don't know what the fuck's going on. I never have. But hey, I like the company. I would much rather these analysts who don't know what the fuck's going on with Tesla, and again, this isn't to disparage them. This is just some genuine, well-meaning advice, is to just shut the fuck up. Again, this isn't like coming from a place of hate or anger. I just literally mean shut the fuck up until you know what you're talking about, then talk, or preface your analysis, your price targets, etc. with, I've been completely wrong the entire time. I still don't know what the fuck I'm talking about, but here's what I think. Because if analysts are going out there and being so incredibly, embarrassingly wrong about a company for so long, they lose credibility. It's better to explain you don't know what you're talking about, but here's what you think, or just don't talk. I mean, am I crazy? Like, do you guys agree? Let me know in the comments. Should an analyst who doesn't have a high level of confidence in their analysis just not provide it, or explain that they don't have a high level of confidence? I think that's probably a good way to operate, because you're less likely to get roasted on a random YouTube video that way. Just saying.
And that's where these people are coming down. It's amazing. I can't think of another place, time I've ever seen it.
No, really?
No.
That is a massive call from Cramer to suggest, remember, this guy has been in the stock game for decades, ran his own hedge fund. I mean, you don't need me to explain who Cramer is. The fact that he, of all of the companies and stocks he's ever looked at, has never seen anything like the disconnect between analyst consensus around Tesla and the reality is huge.
I mean, where a company is just, where a CEO is masterful, where a company has done amazing things, and the financials no longer seem. Remember, all the short sellers would call you and say the financials are phony. You take a look at them, maybe this or that.
Yes.
You know, Carl, I know the credits matter, but what really matters, I think, with Teslas is that it's flawless execution. Even in a time of COVID, they ended up doing everything right. And Carl, I just read it and I think if this were a tech company, it deserves to sell exactly where it's selling.
Just give me a quick take, your quick take on sort of this quarter and how it fits into what we've been seeing lately from Tesla.
They are much more consistent about turning a profit, David. And I know there will be some people who will say, well, look, without the zero-emission vehicle credits that they received from other companies who bought them from Tesla so they could offset their carbon emissions standards that they weren't meeting, whether it's in Europe or the U.S. or wherever, that doesn't matter. That's part of the game. And you shouldn't hold that against Tesla. Fact of the matter is it was a fifth profitable quarter. Now, going forward, what stood out, and especially during the conference call, they talked about this, they're going to be ramping up production. Giga Berlin and Giga Texas, that's the plant that's being built in Austin, they'll start production late next year. It's not going to be big volume, but this is this period here, David, where we see over the next year to 2 years to 3 years where you're going to see big ramp up in production from Tesla.
Going to be demand for that ramp up in production?
They believe there will be. Now, remember, you've got the Tesla Semi. The question becomes how many companies are going to say, yeah, we do want that electric Semi coming out of the Gigafactory in Texas. The Cybertruck, we've talked about that. And then Berlin, I definitely think there's going to be demand there. I mean, Europe is a market where electric vehicles, there is demand. And as countries are mandating you need electric vehicles there, you will see that definitely take off.
There's definitely no question over demand. There's just a question over people's ability to infer future demand based on the economics of electric vehicles. I mean, I guess we'll just have to wait and see for the doubters out there, but I'm telling you guys now, 10 years' time, the majority of new vehicles being produced will be electric. Most of the companies that used to produce internal combustion engine vehicles will be bankrupt. Tesla will be dominating, and hopefully there's a few other players that are chasing Tesla in a distant second, third, fourth, and fifth. Remember, the Berlin Gigafactory alone will ultimately ramp to 2 million vehicles per year. Yes, Tesla has confirmed this. 2 million vehicles per year just from the Berlin Gigafactory. Things are just getting started.
Phil, I've got to know what your take is on the sale of these regulatory credits. 4 quarters in a row in which they would not have turned a profit without them. But so much of the demand picture seems to overshadow that.
It does overshadow that. And I guess the thing that I come back to is everyone says, well, they wouldn't be profitable without that. But that is part of the game here. And it's in the auto industry. I never hear anybody say, this particular automaker had to spend X $100 million for ZEV credits so that they don't get dinged for their sales in Europe. Why is it never on the other end? It's only with regard to Tesla. I understand that people say, strictly looking at the operations, they would not have turned a profit. But they are continuing to grow their sales. Their gross margins improved substantially. I think, generally speaking, the ZEV credits, to a certain extent, it's a bit overplayed by those who do not believe in the Tesla story or who want to discredit them turning a profit.
I completely agree with Phil on this point. I've covered it many times in the past. The regulatory credits are part of the competitive landscape. They're available. Tesla has big brains managing their money. They go, oh, we can get some credits. We can factor that revenue in. We can use some of that money to expand our production, reduce our costs, invest in new equipment, instead of pleasing morons who think that we can't make a profit without those regulatory credits. And actually, I don't really think these people are morons. Honestly, I think they're pretty smart individuals just trying to fiddle and play with the numbers and spin things for a bearish narrative because maybe they're short. Maybe they're a paid oil shill. Maybe they just want to see Elon Musk fail because it'll make them feel better about their life. Just saying.
Steve, we know you've been a believer in the Tesla story for some time. This year has, of course, been incredible as we've watched the stock price move up, as we've said, over 400%. But from here, Steve, do you really think there's more, even given the success of the company, that can be done? Or do you need to believe that Tesla, as many say, is more than a car company?
Well, look, there are a couple of points here. First, you just have to stop and acknowledge Tesla's killed it. This is a stunning quarter. Sold 139,000 vehicles. They're on track to 500,000 vehicles. When Elon Musk said they were going to hit 500,000, that sounded like a pipe dream. Now they're doing it. Second, record quarter, $8.77 billion. Just so people understand, that's a 40% uptick from just last quarter. So they're bringing all these new products to market. By the way, not just the Semi, Cybertruck in the wings, over 600,000 orders. And to me, most interestingly, a $25,000 car that could be 2.5 years out. That is when you start seeing Tesla being the number one selling car in the country, electric or gas.
That is a massive call from Steve, but I think he's onto something. Just picture this, 2.5, 3 years into the future, Tesla has a $25,000 electric vehicle with autopilot, full autonomy available as an option or a subscription as well. How does anyone compete with that? They don't.
So I think there is some headroom, but you got to pause here for a minute and take a breath and say, at $430 a share, $405 billion market cap, and I love Tesla, but that means that Tesla is valued as highly as Volkswagen, Daimler, BMW, General Motors, Ferrari, Ford, Honda, and Hyundai, all put together. So look, I think there could be some turbulent times here. By the way, as far as the ZEV credits, the simple fact is this: Tesla is eating their competitors' lunch, and they're making them pay for it. That's a pretty cool trick.
What a great point to wrap this video up on. I mean, just brilliantly articulated. Whether or not you think Tesla can't make a profit with or without regulatory credits, how about we flip the script and just consider this fact. The companies that are attempting to catch up to Tesla currently are paying Tesla to get further ahead because said companies can't build electric vehicles fast enough because they're so far behind. What else can I say? I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget your free stocks with WeBull and stake using the links below. Open a new WeBull account, deposit $100 and you'll get 2 free stocks valued up to $1,600. And stake, spin the roulette wheel, you'll either get Nike, GoPro or Dropbox. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.